available today, this Friday, but we're going to be talking about stocks. Welcome in, everybody. Thanks for watching. Thanks for joining us today as we go live. We're also live on Facebook, Twitch, Twitter, and everything. So go ahead, subscribe, and like us everywhere. We're doing our best to try to spread the word and help everybody get involved. As I've said numerous times, I'm a licensed broker. Used to do a lot of trading back in the day. I have a Series 7. I'm not a financial advisor. I was never a certified financial advisor. So if you ask those type of questions, I definitely suggest you seek out a financial advisor. Definitely good to always have that game plan, have those questions for you, and have someone to help you along your path. With that said, here I'm going to be talking about just some things going on in the stock market. Some things. Now, I am going to be showing you the Robinhood account. I don't use it much. I only have like a little bit of money in there, and that's only because I use their card every now and then, just for some subscription stuff and things like that. Don't really focus it on there. I use other brokerage firms and everything to do it now. But so let's get started. We're sitting here, got a few people in, so thank you for your support. Don't forget to like the video. It really helps out and really gets it out into more of the algorithm for everybody. If I can get some likes, really help a brother out here. So, but with that said, here it's been a crazy year, crazy week, crazy a lot of things going on with the markets, and there's been a lot of things that I do normally watch, but if a lot of people have been talking about recession, I can tell you the number one thing I have in my portfolio that is recession, kind of goes up with recession, is Walmart. Now, Walmart for the past year is up a little bit. If we go over the 5 years, you can see it's up tremendously from $82 in 2018 all the way up to 153. Now you can see here May of 2022, right around July, everyone was starting to get the inflation fears and everything. That's when it kind of went down and we just kind of went back up. Like I said, this is a good time to start investing, start DC dollar cost averaging in, start growing in. So, but who I have in my portfolio right now is Walmart. I have Walmart, Coca-Cola, Procter and Gamble. I have Bank of America, which isn't doing so hot right now. We're going to go over that in a second. And I have a short on Coinbase, just a little short, nothing too crazy. I don't really risk more than what I can afford to lose. So, but that's what I have going on right now in there, and it's just been kind of a little bit of a crazy month. I'm going to see if I have Bank of America on this list. Yep. So I've just been buying Bank of America really since 2014, and at Bank of America then was like $9. Like I know, I think it was like $12 then, and so I have made a lot of money off of it already. But I could tell you that it's going Bank of America just because of the fear going on in the market right now. It's still going to drop. It's just going to drop and drop and drop and drop. So it's going to be on a steady decline probably for the next 2 years. Any bank stock's probably going to be on a steady decline till everything bottoms out, market resets, and people feel like we're in a growth process. Unfortunately, if you've invested before, I would not sell. I would just hold on. They still are paying dividends. They're still a healthy bank. They're still profitable. There's nothing really too much to worry about there. Although I will say this, the CPI came out much better than anticipated. People are starting to think inflation is done. Now I could tell you just by watching the prices of fuel and everything going, because I do own a transportation company, is that the CPI index has produced. I don't know if it's like a false recording right now. It's hard to say. However, it definitely is. Things are definitely going down because I'm watching the cost of my fuel it's dropping. Me refueling my trucks on my logistics companies has been dropping steadily. I see prices kind of leveling off. However, the biggest problem is that the The salaries of jobs are declining. Now, if you're new and you're hopping on, thanks for watching. Go to, I'm going to set it up in the description in YouTube. Definitely want to get in there and if you have a question, join live. I'm more than happy to answer it for you. I got that link in there. So thank you so much for definitely supporting us and watching. But if you got any questions, this is always open forum, and it's no question is bad. Feel free to ask any question anytime. So, but like I said, we're going back to Bank of America. Just I would not put too much into me. I'm already well invested in over 10 years, so I'm already doubled my money off of this thing. I'm definitely going to hold it. Just going to keep buying. Dividends are kind of on the low side. That is to be expected of any bank stocks at the moment. They are going to drop off the face of the earth right now, just because of everybody fearing that the bank run's going to happen, things are going to collapse, yada yada. So I wouldn't really stick too much about. I would take a look at though is Goldman Sachs. They seem, no matter what the problem is, they always seem to skirt by, no matter what. Excuse me. They always seem to skirt by. They never get caught. They never do it. Just and they're the ones that facilitated all the problems to begin with. However, they seem to be doing good. Like if you look over their 5 year chart, they're up 80, almost 35%. But let's go over 1 year, they're still up. But if you go over the last month, they're starting to head down. Now, $10 is not much on a $300 stock, $300+ stock. However, they do have a good dividend ratio, but for a bank, they could do a lot better. But the problem is right now is they borrowed a lot of money on zero APY to do all their investing, and now they're paying like 8-9% on it. So those things are going to start to add up, eat into profitability. I expect in the coming months, probably after the summer season, which is usually when people are buying homes, people are borrowing money. That is the time frame where people that's it's not going to happen yet, but once that happens, after that time frame, they are going to lay off. They are just going to start laying off people just left and right, left and right. So I expect them to probably do a 10% layoff. Wouldn't surprise me if that's what they're going to do. I would also I do also think that uh, the tech sector is not done with laying off. Speaking of the tech sector, let's go back over here. Let's go over here and look at Facebook, or I should say Meta. I don't know why. Maybe it's going to come up. Oh, there we go. No, that's not it. Facebook. Okay, there you go. It's hard to say. I can't seem to find it. I think it is under Meta, but anyway, it's most likely going to start going. They're going to do another round of layoffs. Um, Same thing. Like, let's just take a look at Google. Now, in the last 3 months, they're still doing a pretty good job at raising their stock, but they're still suffering layoffs too. I said I know somebody that works in there, and they are saying that they're looking to cut another like 3% off the bottom line of employees. So that's just hearsay, but that's the word on the street. Now it is down from its 52-week high, as you can see here, but overall, it's still beating where it was at the beginning of this past year. 3 months though, it kind of skyrocketed, but we'll have to see because you can't really tell just yet. I think it's gonna start collapse. It's gonna start going down a little bit. Now, one company that we really should be paying attention to is Amazon. I think it dropped to a low enough point. You should be able to get in on this. So this month it's been kind of on like a push upwards. But I think if you look over to 5 years, really during that pandemic era, it was rocking high. Now it's kind of down here. But the thing is that Amazon is so integral now to the system, to everything. I would say on my logistics side, my hotshot loads return they account for 25% of it. And if I'm not even that big of a company. I'm just I'm still just a drop in the pond. People this is still a valuable thing to people. So if you're looking to get dollar cost average in, this is probably a good one to pick as well in your portfolio because it is kind of recession proof as people are. I would say people are probably doing a typical work job where they commute, and then they're probably, excuse me, probably doing a job where they are working from home afterwards to earn some extra cash. This is probably going to be the play. This is probably going to be a very beneficial thing because now they have their grocery deliveries and all that stuff. They're doing a lot of things. So, and I think the fresh foods delivery system that they're doing, I don't know if they're doing it everywhere. They're doing it here where, you can order your stuff and it just gets shipped right to you. So, I think Amazon is probably a good buy, but they're also going to start cutting a few people as well. Probably going to skim another 1% off their bottom line. And when they say skim, they're taking the jobs that are just like extra, or they were just kind of doing some R&D and something else, or this was just a test market thing that they were doing. They're going to shut it down. They're going to try to squeeze down whatever their overhead is, because you got to remember anything in the corporate world in a business is all overhead. Your accountants, your marketing team, your IT department, you start to think, what can I, well, who can I live without? And you'll just start constricting. And that's what these companies are doing because a lot of the free money, because what they were borrowing money at 0% is all gone. Some of it was APY, corporate paper. So now it's up. Now they have to start paying interest back on it. So they're not, the free lunch is over. That's basically what it is. Is the free lunch is over and done with. So I get it with a lot of things, but I really really think it's we're looking at a huge shakeup and changes in how Amazon and everything does their work, as well as a few things. But they are doing a lot of new things too. So, but a lot of it's with no staff stores, robots, more automation in the warehouses, which is always good. But unfortunately, that also hurts people that do need a job. Oops. So let's go back over here. So another one that I'm keeping out on, because usually moving is a recession-proof business, is Porch Moving Group. Now, as you see here, they're relatively new and they kind of been buying up a lot of people over here, but now they are sitting at $1.10, which is not good on the exchanges. If you get under that dollar, you're gonna get delisted. But we'll have to see here. In the last year, they've just been taking a tumble. They were at almost $5, and you see they just dropped off a cliff. Excuse me, mainly because earnings have tumbled off of this because a lot of, unfortunately, they're if you sell on price when the economy changes, you'll be the first one out of here, like to the moon. So it's these guys are probably going to get delisted. There's not a lot of outstanding shares of it at the moment. Or I shouldn't say outstanding. There's not a lot of shares of it, period. They are definitely going to see a lot of layoffs because they just got too much overhead on their business. They're not making enough money. their earnings, like they are estimated to lose 74 cents a share at the end of this second quarter. So is that second quarter, April, May, June? So yeah, their next earning report. I'm sorry, for Q1, not Q1, Q2 is estimated to lose 74 cents a share. So that's a lot of money. That is a lot of money, which is really weird because moving is a recession-proof business. It's always people always need to move, whether it's for jobs, buying a new house, downsizing, upsizing, family, getting bigger, or consolidating. Younger families moving in with their parents, kind of deal. It. So for Q1, they lost 39 cents a share. Now I've been watching this. Now you're going to see something very interesting because I like I said before, I own several businesses. We make quite a bit of money here, and this I'm looking at this as kind of like I'm going to sneakily get myself up to 15% control. Now it's not going to happen in a year, but now at $1, like I mean, shoot, you get to get a lot of shares for $5,000, right? Now it is a huge risk to put money into this for me because who knows, they might implode. But however, what happened was is during the free money time during the pandemic, and they were pumping out that extra money. They borrowed a lot of money to buy out and consolidate a lot of other businesses. So they bought Hire Helper, Moving Staffers, Simple Moving Labor, and I think one other one there, and they all merged into Porch Moving Group. Now, there is going to be a huge change to the broker status. The Federal Department of Transportation, the Federal Motor Authority, the FMSCA department is looking to change the way they are allowing brokers to be involved, which usually means they're probably going to get rid of them because they do drive prices unrealistically down, put a lot of people out of business, and they suck up a lot of consumers. So it's kind of weaseling its way out. Now they've had their low, which was 79 cents. They're currently at $1.10, but they still can lose another 50 cents on this sucker. And I can see where it's going. I can see where the stock is going. Now, here's where you have to really start doing your due diligence, digging up financials, seeing if you could talk to middle management, not upper, not lower, but middle management, because they kind of know what's going on. They're not they haven't signed any non-disclosure agreements, so they're going to give you some information, especially if you find a disgruntled employee. Oh, those disgruntled employees just spill the tea on all the information you need. So you got to remember, investing is all about information. All about information. The more information you have, the more money you can make, and the better your decision at investing can be. So if you can get some information on some employees and work environments and things like that, you can kind of get an idea of where a company is going. So that I have not done yet, but I can imagine that the meetings at Porch Moving Group are not good because when they started their record decline this year, it was right around March, and it happened 3 months before everyone else started going down. And then you see right here, April here just dropped. But if you look back here, August, this is when moving companies started having trouble, and it just slowly just went down. We shot back up, and then we're down now. So this is showing me that okay, people are getting tired of the losses. If you look here, they have lost their highest in the last 2 years has been -6 cents per share, and they just been dropping ever since down to 39 cents as actual earnings per share, so negative 39 cents per earnings. And the next quarter they're anticipating negative 74 cents per share. Now I tell you, there must be a lot of things. A lot of people. It's still registered as a buy by the rating agencies, but I don't just go solely off of that. But it has a huge explosion potential in 10 years. So this isn't something that This is if you're investing in this, it's a 10-year move. But just remember, it also is you can do a heavy loss with this, and it's unfortunate because like these guys could go out of business. So, and if you do have the Robinhood app, I am not paid to promote it, but it is a simple app that you can use for a lot of people getting started. They did add a lot of features like replaying earnings calls, and that's what we definitely would do. I would definitely do that, and I'll probably do that in one of my segments when I'm going over when I want to go over stocks. I don't know when I'm going to squeeze those in because guys, you got to remember I run two big businesses and a bunch of other stuff. So it's I don't have a lot of time to do a lot of stuff. I barely have time to do our crypto morning chats. So, but with that said, here I am definitely keeping my eye out on Porch Moving Group. I definitely can see it, but I'm probably going to want to start sucking it up. I'm probably going to start sucking up now because it has dropped to a very nice viable range. And if the economy gets back together in 10 years and everything goes right, I could see myself earning a 20x off of this. Just because it'll be like $20, $25 a share. I'll have bought a significant amount and we'll be able to hopefully have a good voting share. That's the plan. That is the plan for it. But with that said, let's go back over and let's check out Chase here. Chase is these guys kind of took over First Republic, and they are not looking good for the week. But 2% is 2%. However, I do notice that they are making more banks. They opened up a branch here, and they never had a branch in Arkansas, and they're opening up a branch here. So they seem to be doing pretty good. Earnings $10 a share. That's freaking wild. But a lot of that is due to they are writing a tremendous amount of mortgages. But speaking of mortgages, Wells Fargo is getting out of the mortgage industry because of some shady shit that they've been doing. And I had a buddy of mine that works at Wells Fargo. I told him to be careful. They do some shisty stuff over there. It's by all they're literally like 50 Cent. Get rich or die trying. Like that's how they operate. So I would definitely be wary of anything coming from Wells Fargo. But if they don't do mortgages, they're going to rot because how a bank makes money is by lending out money and getting a very healthy return on it. Like they ain't making any money if they're just holding people's deposits. That might spell the end of Wells Fargo. That'd be a shame, right? 100-year-old bank just gone. But hey, these things happen. This is capitalism. Things come, things go. Sometimes you could be around for 200 years and gone in one day. That's how that's how things roll. Sometimes it's capitalism. Fair is fair in capitalism. But JP Morgan it's probably still a good bank to put into your portfolio. I would just keep it at under 5% of your total portfolio. Don't get too wild with it. Don't get too how should I put it, crazy with it. Like don't let this thing become 25%. Like if you're buying like 200 of another stock for the month, buy like one stock of this or like half a stock. Don't put a lot of money into this right now because it still has the potential to go down. The banking problem still is not over. We still got a few more because like I said when Barclays collapsed in 2008, they said, "Oh, we're done, we're done," and then boom, Lehman Brothers just vanished. So that's what I'm saying. You never know about these things, and there are a lot of bad bets that these banks have made, just absolutely asinine bets. Like you can't be doing that with depositors' money. You just can't. You just can't. But They did, and if we don't have a bull market soon, they're going to be out. And unfortunately, with what the raising interest rates did exactly what it was supposed to do, squeeze out people. That's what it was supposed to do. Squeeze out businesses, squeeze out people. Anyone who was doing something they weren't supposed to do, they get squeezed out. That's just how it works. So, I mean, there really isn't much to cover this week other than the CPI came in at what? Let me see what did the CPI? I have to refresh my memory because I generally don't care. I usually go off the information of my business reports. All right. Yeah, I think here it came in quite under 4.9. I think it was 5.2. Sorry, 5.2 over time. Food. Let me actually no. Let me just share this screen for you guys. This is what if you're on TikTok, I'm sorry, I can't link it to my streaming, but if you're on anything else, please go over to YouTube, Twitch, Facebook, Twitter, and check me out there. So let me just and that go over here, and there it is. Let's share this screen. Okay, like you see here, the food thing started to drop a little bit food, but what I wanted to see here is just here fuel and oil started going down. We also have electricity leveling out, utilities. That's one thing I'll say that after, my utilities on my warehouse, which is a pretty big warehouse, was dropping by like 10-15% every month. I was spending a little less, a little less. So this is a part of the thing where I don't just do bookkeeping. I do my bookkeeping and then I analyze the increased gains each month. So that way I know, okay, I expect a 20% increase here because of the summer or a 15% decrease because of the winter. Excuse me. Yeah, transportation services is up 11%, shelter up 8, but overall, I don't think it's now. Whew, I'm tired. I'm getting a little tired here. Uh, I don't think we really have too much to worry about, but I'm trying to see here. Yeah, see, 4.6% over the last month. So we're down. It cut in half. It has cut in half over the last few months. Like as you can see, it's just been kind of going down there a little bit. But 4.6% is still high when they're trying to get to around 2%. And but this isn't something you can just arbitrarily control. But it does look like we had our downturn. If you own a business and you survived, congratulations. You survived the hurdle. Now start preparing for the next one. And the only way you can prepare is if you got a lot of cash. So try to start cutting corners. I say with my business, I went with new partners. Anyone that could say, hey, I could save you 10 to 12%, I did it. I just cut. I just start cut without cutting my staff or their pay. And I mean, I cut down as far as I could. Then unfortunately, I had to start cutting staff. So I just cut all the way down. But I can see here houses still in the market for a while, but it's mostly 1.5 million and up homes just sitting there, still for sale. People trying to sell them, things like that. So I'm not too worried about it. Um, I really don't think it's gonna be. It's gonna be good for me because I can get a nice house soon, in probably the next 6 to 8 months for fairly good price, and I'm might be able to buy it with cash. But the starter homes, everybody's buying them. everywhere. We're moving a lot of people around. Like I said, when you start getting this, people are gonna start moving around. So I think the jobs are kind of leaving California. So people are kind of leaving California, and going to Austin or wherever they can go, wherever the jobs are. That's where they're gonna go. And right now, I think it's Miami, Dallas, and Austin that big companies are going to, especially tech companies. Miami and I think it's Austin. They are hitting hard there, and or Houston, I think too. But you can't really tell. But all I can say is like people are moving around. People are spending money. Interest rates are still going to increase. I think they're still going to raise another 0.25 rates. So just be prepared. But understand that people are buying homes at 12% interest. A lot of you young people, Gen Z and millennials, this is a weird time. The fact that you could buy a house with 3% interest has been absolutely weird. Normally it was 10 to 12 sometimes, or normally 8 to 7, which is fine. Like that's not that big of a deal. I'd say the biggest problem is that so many rental properties were built in the last 3 years. Like I know here there was 48 new Class A luxury rental communities. I mean, like 1,500 doors plus built, huge complexes, and they're all like 2,300 a month, 2,800 a month. So quite astronomical and out there. But that's a bubble. It is going to collapse. Now, if you're in my position and you have your business and you already have a significant net worth and you're an accredited investor, that in the next couple of years, you are going to be in a smorgasbord of buying up all these nice rental properties with 1,500 doors or more at phenomenal prices. And like I'm telling you right now, the rents will come down because they just got to fill these doors. Like you can't leave a unit empty all the time. It's not going to sit there and work out. It's not going to work out. But with that said, guys, hey, thanks for watching. Like and subscribe. Check me out on Facebook. Get me up. I want to at least get to 200. I want to get to at least 200 likes and follows on Facebook and 500 subscribers on YouTube. So please like and subscribe. Share the video too, because I want to get more people in, more people interacting, more people asking questions. That's what we're here for. That's what, and to me, it's great helping people. And might be able to learn something as well as hopefully help someone else learn something. But thank you guys. It has been a pleasure, and I'm off. Today. This is our last broadcast for the week. Next one is Saturday at 9:30, where we'll have our a little longer than normal broadcast, but not too much. Or actually, it'll be at 9 o'clock. I think really 9 o'clock, 8:39. We'll do our Sunday our broadcast where we more interactive. You can ask any all questions, and I usually stay a little longer to help to answer anyone else that kind of trickles in. But every Monday through Friday, 8:30 to 9:30, we do our crypto morning and investment talks. You can ask any questions, although we try to keep it one or two questions, and because we got a time frame to keep, I got to get to work on my business. Cody's got his stuff to do. And, it is, of course, the beginning of the day. But thank you guys. Like and subscribe. Follow me. Please share this video. Really helps out if you can share. That'd be awesome. And I'll check you guys later.